Hi there, I'm Julie Tallman, and I'm with Christian Sadler.
Hey, everybody.
And welcome to the Fundication Show. Today, we'll be speaking with second and third generation passive investors, Shalabh and Eesha Moonat. Welcome.
Hey, guys.
Thanks for traveling up again.
Thanks for having us back.
Absolutely.
Yeah, part two. I'm excited to get into this with you guys. I know that we had you at the Best Ever Conference on the podcast stage there, and we got to learn a little bit about you guys' investment strategies and how you're working together. Eesha, how you're learning about the business. I would love now to talk about and jump into today's current environment. I mean, I think that we're dealing with kind of an unprecedented time of passive investing in real estate, and nobody better to talk about it than those who are actively investing in different projects.
Sure. Yeah. It's been a really interesting time. I mean, we talked, when was Best Ever Conference? 2 months ago?
First April.
Yeah. We talked a little bit about the fact that our strategy hasn't changed that much, but it's been definitely tougher to execute on. Interest rates are still high. Eesha and I were just talking about that yesterday. And prices haven't really come down that much, to compensate for that. So it's been pretty challenging, and costs are continuing to go up at a pretty good clip, especially when you look at like insurance. That's been a big issue. So we're being really selective and pretty cautious about, what we decide to fund.
Yeah. And you were saying last time that you look at a tremendous amount of deal flow, but you only probably make a couple of big moves per year. Is that still the case?
Still the case. I mean, we did one so far. I'm looking at probably one or two more for the back half of the year.
Got it.
And that's normal for you. You haven't slowed down. You just have to do more due diligence. Is that what I'm hearing?
Yeah. I mean, for us, number of deals kind of stays constant. The dollar values tend to go up.
Yeah. And are majority of those 1031 where you're rolling the money over?
It's a mix. So it's a mix of, 1031 exchange money and fresh capital. So I think we talked about this. Maybe when we met at my house, but we've been in this sort of long-term move to put more money into private investments, so out of public equities and into either private real estate or private equity investments. And that's continuing. So we're continuing to sell public equities and move it into those types of investments.
Got it. And do you guys make that decision based off finding the right opportunity that it makes it worthwhile to pull that money out of the equities and take the tax hit? Or are there other reasons that you make that decision for?
Yeah, I mean, we hate the tax hit. So it's kind of a mix of things. It could be just a good time to exit a specific equity position that we have, and then we'll kind of evaluate our options at that time. Or it might be, on the demand side, and we might get an opportunity to invest in something and then have to go figure out where we're going to go get the capital. So there's not like a single driving force. I mean, the only driving force is that we want more money in private deals over publicly available deals.
Got it. And I would love to hear how your guys' current portfolio is looking. Have you seen a change in the returns that you were originally promised versus what you're getting?
For sure. So a number of our real estate deals, haven't done quite as well as we expected them to. They've been, maybe high single digits, low double digits instead of, teens and 20s. I think most of our deals have done pretty well, but we've had a few that have definitely struggled.
Got it.
Eesha, are you part of the due diligence process at all? Like, does your dad show you at all the documentation or the numbers, or do you get to see the different properties or what you're actually investing in, or what areas have you been able to get involved in?
Typically, we kind of talk about this in passing. Like, he'll be like, I'm looking at this new thing that we may or may not be doing, and this is what I think. What do you think? And then I'll say something like, I think that's really great, but I don't really understand. Like, what's the big deal about self-storage, for example?
Right.
We were talking about that this morning. And he'll explain it to me. So I'm not as much a part of the process as I would like to be. But baby steps, still learning.
Yeah, you'll learn so much by just absorbing and hearing that.
So now that you're out of school for the summer, will you spend more time understanding what's going on with the portfolio?
Absolutely. I don't think I could help it if I tried. This one is always on phone calls and talking to people, and I pick up small parts of it, and I'll be on my phone like Googling and like, what does that even mean? So I pick up stuff whether I like it or not.
Yeah, that makes sense. What are some of the biggest opportunities that you guys see emerging right now in the current market?
I mean, so with interest rates where they are, we're seeing a lot of deals actually taking on negative leverage, which is, a weird place to be as a passive investor. So taking on debt to reduce returns, it just doesn't make a ton of sense to me. I think the idea is you lock it up at a price that makes sense and then hope that you can refinance. But I think we were predicting 4 rate cuts this year, and we've gotten 0. And now we don't know if we're going to get any. And so that market's just really, it's fairly unpredictable. And so I think you have to sort of invest on the merits of the investment itself. And so we've been really slow to move money around because of that. And I think there's some pain to come. So I think people really need to be careful about specifically where they go into. I mean, there are some bright spots for sure. And so we've been looking at investments that have higher cap rates, and that's kind of where the discussion around self-storage started was, if we don't see multifamily deals that we like, because that's been kind of our bread and butter, do we want to start moving money into other asset classes like self-storage or industrial, or, do we want to look at development deals and, things like that? So.
Yeah. And for the most part, you guys are different than many passive investors because you're not necessarily looking for the cash flow along the way. You've kind of said before, you keep my money as long as you want, as long as you're giving me the compounding effect that I'm looking for.
Yeah, that's exactly right. In fact, lately, and I think we talked about this a little bit the last time we got together, lately I've been pushing sponsors to, really reduce the cap table as much as possible to enhance returns and then recycle the capital that they would normally pay out as distributions. So the deal that we were talking about last time that we just did in Florida, we reduced the capital raise quite a bit just from that perspective, right? Cost of capital is high. Why would you want it sitting in a bank account? Instead, let's just move a little slower and just recycle that capital for renovations and things like that. So, we raised enough for the big capital items, but all of the interior renovations and things like that are going to happen out of cash flow.
Got it. And a lot of times you guys are getting special provisions when you step into a TIC position. So are you able to do that on your capital, but still let the other LP investors take their cash flow along the way?
No, we kind of ruin it for everyone. So, I mean, really, we're enhancing it for everyone, right? Like when and Eesha and I talk about this all the time as well. Like when you're buying a piece of real estate with someone, it's kind of like a marriage, right? Like you're kind of stuck until that deal resolves.
Yeah.
I guess your guys' business notwithstanding. So we should definitely talk about that because, liquidity alongside of a deal is amazing. But really, you're stuck with them. And so having people that are like-minded and thinking about the same things, the same outcomes, like how are we going to get there together, is really, really important to me. And so that's kind of a good litmus test. Like if I have 3 or 4 other TICs that are going into a deal with us and I say, hey, what if we didn't pay distributions for 2 years, and they all revolt, it might just signal that I'm in the wrong place.
Yeah. Well, and I think a lot of times people are taking distributions almost just from a comfort level. It makes them feel a little, bit warmer inside knowing that they're seeing that return when in reality, like you said, if you could roll that in, there's probably a better compounding effect of not having that negative leverage, from borrowing the money from somewhere else.
Yeah, and it's really interesting to me. I think you're completely right. Like the distributions that sponsors pay aren't actually tied to the income that the property is generating, right? Like they can pay it out of reserves, they can pay it out of so many different like financial instruments. And yeah, it makes people feel very comfortable. And when interest rates were in the 3s and 4s, like it didn't really matter that much. But now that interest rates are in the 7s and 8s, and some of the deals I'm looking at that's even higher than that, it just doesn't make sense to me. So,
Got it.
I like that you can see that, because so many investors I talk to, they intrinsically kind of tie the success of the deal into the distributions. Like
Right.
I've literally heard them say, it's not doing well, we haven't gotten any distributions.
Right.
And they, without knowing what it's doing. And so we definitely want to talk about our listing hub, and let's take a second and chat about that if we can. So Eesha, I don't know if you're aware, down the road, as you guys hold passive investments, iShare has what's called the Listing Hub. And it's a place for LP passive investors that have already done some of the hold. Let's say they need to pay a hospital bill or a tax bill. You know, we hear that all the time. Taxes, just got to sell this. It's a bad investment. I haven't had any distributions. You know, it's a great investment. So is basically the first public format or kind of forum or classifieds for people to sell those existing shares to other passive investors that want to buy those. And historically, there's not been a place to do that. So we're having so much fun helping people understand that these really should be that this should be liquidity available on these type of investments. You shouldn't have to be locked in. So thanks for bringing that up.
Yeah.
How are you seeing with your current investments in terms of hold times? Have the hold times been a little longer?
They have been longer than we, originally discussed. Like most of the deals that we did, let's say 10 years ago, they were predicting hold times of 3 to 5 years, and we're probably on year 8, 9,
7 to
something
10.
like that. Yeah.
And we're getting a lot of that as well, where it was like, I was expecting to be out 2 years ago, we're still in. And so I just want to see if anybody else wants to buy this at this time so I can move forward like I thought I was going to be able to.
And so for us, I love it, right? Like I don't want the transaction costs. I don't want to have to do more due diligence on properties. If the properties are performing well, I'm happy to hold them forever. But yeah, I know that for a lot of investors, that's the scary part of investing in real estate is, when am I ever going to be able to get my money out? And it was interesting because on this last transaction that we did in Florida, I actually had 3 friends that came in on the deal with us. And 2 of them joined our tick. And, I was very clear with them that you're never going to see this money again. Like, this is going to be invested forever. Mm-hmm. And the third one opted not to come into our tick because she was like, I don't know if I ever want this money back, but I'd like the option of having it back.
Yeah.
And obviously those are like 2 very extreme examples, but, with the friends that came in, I just wanted them to, not have any kind of misunderstanding around it, that this, we want to defer these taxes forever, right? And so if you're coming into this situation, that's what we would expect from you too, so.
Yeah. And Eesha, you got to meet Michael Anderson, and this really kind of came from his mind. He syndicated real estate for over 40 years. So when he sold his last company, they had about $1 billion in assets under management, all multifamily real estate. And a lot of times people would come to him and they would just have a life situation of some sort. And it was really, the pressure was on him at that point of, how do I make good with this person that has this life emergency? And so the secondaries market creates that liquidity where if somebody has an emergency, they can get the capital that they need.
Yeah, I mean, we've been talking about secondaries quite a bit lately. It's obviously like private markets are becoming a little bit more public, but there really isn't something like the listing hub out there. I mean, it's still done in a very old school kind of way, right?
Yeah.
You call somebody who calls somebody, oh, I know somebody who might be interested, and it's just a very inefficient transaction. Having that sort of in a place where you can get all those parties together makes it so much more efficient. So,
yeah. Do you guys see yourself shopping for secondaries?
I'm definitely a disciple of Warren Buffett, so at the right price, I'll buy anything, So yeah, absolutely.
Yeah.
Yeah, we haven't yet. That's not true. We did one secondary purchase transaction. That was kind of a special case. We've sold in the secondary market, but mostly around private equities and not around real estate.
Yeah, and I think that's the one thing is secondaries is talked about a lot more often in just the private equity space, but not necessarily in real estate for some reason. And I think, that was a little bit by design along the way. The syndicators wanted, people to consider this an illiquid investment, and they didn't want to even get the question. But I'm starting to see a lot of them open their mind to the idea of this, because the way that Mike put it is 7 out of the 10 people that wanted to place money with him, they believed in his deal, they believed in the returns, they believed in the tax benefits of it. They just didn't know that they could leave their money trapped for that amount of time. So just that little bit of extra comfort, because same thing, it's kind of like the distributions that you're taking for comfort, that liquidity, oftentimes it's an uncomfortable feeling because most of us don't know what our life is going to be a year from now, let alone 10 years from now.
No, that's absolutely true. And I think that it's almost like an insurance policy, right? Where you have this potential ability to, liquidate in that market. So I think it has the potential to open up this market to a lot more people.
Yeah. Do you guys see yourselves ever getting into the operations side of real estate?
Ooh, that's a good question.
Not me.
Shalabh?
No chance.
Isha?
I don't believe so, but like you said, no one really knows what their life's going to be like in a year or 10 years, so
Yeah.
I've got a lot of life left.
You may
Hopefully.
love demolition.
Well, and I love it because you guys have been in it long enough to have learned these lessons. But we have a good friend, Gene Trowbridge. He's a real estate attorney. He's set up many, many real estate syndications. He was a syndicator himself first, and then he decided that he didn't want to be on that side of the business, so he just helps people on the legal side. And he says he sees these people that they get in a couple of LP positions and they're really excited and they're thinking, this is going great. Why don't I become the GP?
Right.
And they don't think through that business side of it and all the hassles that are being dealt with on the back end when you're in an LP position.
Yeah. We like passive investing for a reason. It's very passive.
So, why would someone want to sell if it's a good deal? And would they have to sell at a discounted rate?
So that's a really good question, and it's probably one of the most common questions that comes up. So typically when somebody is selling their position, it's because of a life situation, as we've mentioned. So I'm going to go back to Mike, for example, because he always gives these 3 different scenarios. One was Mike was a track guy. He loved racing cars, and oftentimes his friends who were investors with him were on the list for the new Ferrari or whatever it was. That's a very short list, and you have to move very quickly in order to get one before you have to pay above sticker price. So the pressure was on him to make sure they got that new Ferrari. But there was other times where, for example, they invested with him originally because they wanted to put their kids through college, and they were hoping for these returns and these gains to help offset the cost of college. Some of these kids were getting into colleges earlier, and they were getting into Ivy League colleges, which were much more expensive than they originally suspected. And so they wanted their money out for that reason. And then, the third that he really relates to, and, you can feel it when he talks about it, when his friend came to him and said, my wife has cancer and the insurance isn't covering it. None of those situations did Mike ever want to say no to. But as a syndicator, he can't pull money from an existing transaction or, a future transaction to offset that. So it usually meant that he was dipping into his own pocket or raising money, additional money to offset that. And so it was really, it put a strain on him to continue to build his business. And then your second question of whether they sell at a discount, that's the beautiful thing about what we're trying to create is normally when you would sell your position, you would sell it back to the person who got you into the deal. So they know where you bought in, and they're usually going to probably negotiate because, again, it's a burden on them to get you out of the deal. And if they don't have the ability to do it, usually the provision is you have to sell it back to somebody else who's already inside of the deal. And that really comes from some of the original rules within 506 scenario where you had to have a pre-existing relationship. Now, when you get into a 506C, nowadays, you don't have to have that pre-existing relationship, but it's transitioned forward. But again, if somebody got into the deal with you originally, they know what your value is when you bought in. but you might have upside that you've already built. So our goal with the listing hub is that people can realize some of their gain, maybe not all of it because they're exiting early, but they can realize some of their gain and still be able to get the liquidity that they want.
Yeah, because they've already held it for a specific time. So I've heard Christian use the term meat on the bone quite often, and there really is meat on the bone on both sides.
Yeah, so they're getting a discount to what it might be worth, but you're potentially still making money from where you invested.
Yeah. Yeah. And, you can get really creative with it. That's what we're seeing with this as well. And so, sometimes people haven't done the math in their own head. They're just saying, I put $100,000 in, can I get $100,000 out? Or how close can I get to that? Sometimes they forgot about all those distributions that they've gotten along the way. So when they start doing the math, they're looking at it and saying, okay, I am actually coming out of this ahead, even if I do sell it at break even, let alone this is a buy and sell scenario that is in the open market. The beautiful thing about the free market is as well as you can market that and explain to other people where the value is on the other side, the potential you have to get a bigger slice of your gain, so to speak.
Yeah, I just can't imagine having to sell my shares back to my fellow LPs, being at the mercy of the people who already own that. They know exactly what I paid. And the beauty of this listing hub is we're creating a nationwide system where you have outsiders to shop your shares. Imagine if you're trying to sell a Volkswagen Jetta and there's only 2 buyers in the country. It's just very tough. But if you can put it on cars.com, if there is such a thing, and there's 20,000 people who have Volkswagen Jetta in there, to be notified that you're selling. Just being able to give it the visibility that it needs, I think we'll really start finding out and getting really important data in terms of even as detailed down to, multifamily in the Miami, Florida area is selling at this type of value, which this information has never been received before. Nobody knows. So we're excited to kind of have the market extend to the public and then be able to create that data so that people know, because when I help people take listings, they'll say, well, how do I know what my shares are worth? We can't advise you on that, It's just tough to say. But if there is a pattern, then all of a sudden people go, wow, multifamily in Miami, Florida is doing really, really well. I should be able to take my distributions, as well as not only do I probably not have to discount it, I might be able to even make a little bit more here. So we're really excited to see the public kind of wrap their arms around this and start utilizing it.
I think the data that you guys get back from these types of transactions is actually going to be really interesting. If you think about the way that private equity vintages get compared over time, it would be really interesting to be able to look at real estate transactions and other transactions from the perspective of when they were purchased.
Yeah.
Right. Instead of just what the asset is, right? Yep. Because when you buy and how you buy is so important to those transactions. I'd be really interested in as you guys get rolling with it and get more transactions, like seeing what you're seeing from that perspective.
Yeah, the data play I think is going to be huge for sure from that standpoint, because it'll be vintages, but I think it'll also be vintages based off the type of debt, for example.
Exactly.
Right. What if you could have got into properties that were bought in 2018 and they had 10-year fixed rate debt?
Exactly.
We're looking at some secondaries right now that have that opportunity where we can buy in at a discount with this low interest fixed rate debt that is interest only for 10 years. And now all of a sudden you can see a bigger cash flow play. Right. For you guys, you might not care so much about the cash flow play, but if you could get those fixed rates and you could see the compounding effect, that's a great scenario there.
To be fair, we'll take the cash flow.
Yes, right.
It's not a bad thing.
Yeah. Exactly.
So is there an asset class that's standing out to you guys? You mentioned self-storage. If you're not able to find much in the multifamily space, is that kind of where you have your sights set right now?
Yeah, I mean, as we kind of look for things that make sense in this interest rate environment, self-storage keeps coming up as something that's of interest.
Yeah.
The thing that I really like about self-storage is that there's just a lot of consolidation going on in that market. And there's a huge difference, I mean, massive difference between what like a mom and pop operator can do and what one of these like professional, chains can do.
Yeah.
And those models are really, really interesting to me. And there's obviously huge economies of scale in that environment. So we're definitely looking at it. It's a space that we don't know very well. So, right now we're in that phase of like getting educated and trying to understand if the numbers are real. There's also a lot of construction happening, in that space. So we're trying to understand the development side of it as well. So I'd say it's early. We could do a deal there like late in the year, but we still have a lot of due diligence to do.
I love self-storage. It just stays so solid. Even sometimes it even does better, in rough times of housing and so forth. But iShare actually has a couple of approved sponsors that deal solely in the storage space, so we can completely connect you there to get those like real insider questions.
Well, our leadership also has interest in self-storage, and so it's something that I definitely geek out about because I'm seeing, I don't know that I've seen another sector of real estate that is experiencing so much of a shift right now. And I can't remember the numbers, so I won't try to cite them. But I mean, the amount that was mom and pop operated even 5 years ago compared to today it's an astronomically different number, because even if they're not being owned by the big institutions, many of them are now being managed by the big institutions.
The value add to go from mom and pop to even just an operator that's coming in with a little more automation, taking out some of the, the salaries and some of the new technology that can be put into play makes a big difference when you look at the numbers. Self-storage is a lot sexier than you would think, just because it's so simple. You can really tweak those margins.
I mean, it's really interesting. What you said like really resonates with me. It feels like it doesn't matter if the economy's going down or up or the housing market's going down or up. Like self-storage just continues to go up.
Yeah. I mean, if I'm homeless, you better bet there is a $300 a month storage unit with my memories and my best furniture and my most expensive high heels. You don't get rid of that stuff.
There is a substantial amount of building though happening as well. So I think, it's smart that you're looking at that and saying, okay, where are we going to invest? Because, the opportunity has been so good for long enough that, how much oversupply could potentially hit the market. And there's also, much more regulation in what they're going, how much they're going to allow in certain cities. But now, some of the interesting things that I'm finding, again, we could probably do a whole episode on self-storage. We just had Ben Lapidus in here recently, who recently stepped away from Spartan Capital, and they're big in that space. But I'm starting to see the self-storage conversion now. So you take these big Kmart's never coming back. So it makes sense to take those retail centers and turn them into self-storage. And I'm seeing some guys that are, just projecting some really big numbers there, because now they don't have those outside walls, which is kind of your main construction cost with a large, facility, and they're already there. And so you save that side of it.
They're getting these properties.
Yeah. Literally dirt cheap or less than the dirt, right?
I don't know. Maybe that can be a summer project for Eesha, and we'll come back and we'll talk about it. Right?
Okay. If you need some connections there and doing your due diligence, we can make those for you.
Yeah, for sure.
Absolutely.
Cool. Well, what's on the immediate horizon for you guys? What are you looking at currently? What kind of things are coming across your desk?
So most of the stuff that's coming across my desk is still multifamily. We've looked at some stuff in upstate New York. We've looked at some stuff in the Midwest. I really like the Southeast. I'm just not seeing anything that's making me jump. I think that's my biggest concern right now.
And where do you typically get your deal flow? For somebody that's been passively investing for as long as you have, Where's your deal flow coming from?
Sort of just word of mouth.
Yeah, still.
Yeah.
Got it. Is there any formal organizations out there that feed a good amount of deal flow, or are you just kind of talking to people that you know?
Yeah, we're just constantly talking to people, and like as we get to know people, they keep bringing us deals. So
Yeah.
I mean, most of the sponsors I work with will do 10 to 15 deals a year. We work with a bunch of sponsors, so
Yeah, how many emails do you get a day with deals? Because once you know a sponsor, you get, like you said, 10 to 12 a year. And then, I mean, you can make a full-time job out of.
it adds up.
How many deals do you analyze a month or look at and try to figure out, could this work for Blue Knot Dynasty?
It depends. The last time we talked, we had just finished an exchange, and when I'm in my 45-day window, I'm evaluating a lot of deals.
Yeah.
Right now, not that many, right? Like right now, I'm just kind of watching the market. The sponsors that I work with know why I don't like the deals that they're sending me. And so they're like, okay, we're going to look for these specific things in a deal for you. And, then they won't email me. They'll just call me and, we'll have a conversation about it. But yeah.
Yeah. Do you guys ever invest into blind pool funds?
Yeah. I mean, so we don't invest in funds at all. Like we want to pick the real estate.
Yeah.
And, as we talked about last time, we really want to have a lot of control going into it because we're going to give up a lot of control once the deal is said and done.
Yeah.
So we want to have a lot of input into, the real estate that we're buying. I like, if you can find a sponsor that you really like and, align with in value, like, I guess I'm coming around to the idea of funds for friends of mine that maybe don't want to spend the time to understand how to do this.
Mm-hmm.
They don't want to do it semi-professionally or whatever you want to call it.
Yeah.
But for us, it's just not the right fit.
Yeah, that makes sense. And I know we've talked about it before, so it was a little bit of a leading question, but I love to, kind of get it out there so people understand, because I think there's a big push towards funds right now. And we run a fund. So I am very much a proponent of, funds for the right reasons and, whatnot. But there's also people that are probably trying to move towards the fund model premature when maybe they haven't taken very many or sometimes any deals full cycle. And so, yeah, I'd just love to get perspective on that.
Yeah, I mean, I love funds for a few different reasons, right? One is diversification, two is liquidity. But I think the thing that I've sort of seen is that it's hard to find sponsors that really stay true to what, where they start. Over the last decade, I've seen a lot of funds that said they were value add funds, and then they started investing in Class A real estate. And it's like, where's the value add, guys?
Wow.
Yeah, right.
And so we saw a lot of that. That's why I like the individual deals, because when sponsors start doing that, we just don't move with them, right? So
yeah.
But yeah, I think from a structural perspective, especially if you can do exchanges within a fund, you get that value. You just need someone that you can basically work with for a very, very long time.
Yeah. That makes sense. Well, if you do have those friends that are looking for opportunities, the Free iShare Liquidity Fund just opened for outside investment. So we're excited about that. And, we tried to make it very investor centric based off of, this is the legacy that Michael Anderson is leaving to the industry. And so we're leading with liquidity through the listing hub and through the secondaries market. That's where we're shopping as well. And, we're really offering, very opportunistic rates of return to the investors without the typical risk that comes with opportunistic situations, because we're dealing with LPs that have a specific need, not necessarily a project that is distressed in any way. So it's pretty exciting.
Well, I think the secondary nature of what you guys are doing is just really exciting. So we should definitely talk about that in more detail. I think the fact that you can get a discount on a project that's doing well, has fixed rate debt for a long period of time. I think that's a really exciting place to be.
Yeah.
And should provide really good returns for your investors. So.
And the other thing that we're doing is trying to lead with liquidity inside the fund as well. So we allow everything quarterly. So essentially quarterly, somebody can, par is going to be that they reinvest their earnings. That's where we get the highest returns, is the compounding of nature of our fund. But then they can also take their earnings along the way. We give a 90-10 split to the investor. So the majority of all of the profits are going to the investor. We only have 1% in management. But on a quarterly basis as well, regardless of how long they've been in, they can also request to start drawing down on their principal. So someone could literally get in and have a life situation come up in the first 12 months and turn around and get their money out. Now they're not going to get the 30 to 32%, return that we're projecting based on a 5-year hold, but they're still going to get probably double-digit returns during the time frame that their money's in.
That's pretty exciting. That's pretty exciting. Quarterly liquidity for real estate.
Yeah.
Yeah.
I think my favorite two things that Christian always talks about is just the fact that it is late stage investing. Somebody else has already held on to that, kind of done some of the heavy lifting, and then you come in. And the other thing that I love you say is, now I can't think of it. The other thing that I love that Christian said,
love that I say something,
is basically instead of going from pro forma, you're going from performance. You can see those numbers, and people will say, this is an interesting deal. Why would somebody else want to buy it? And it's like, well, to start with, there are actual real numbers. It's not pro forma. They know exactly what they're getting going in, which you don't always know.
Yeah, and that's a tremendous amount of risk mitigation, is when you can look at how it's performed. Now, of course, the past does not necessarily determine the future, but you can get a good idea of how they've, operated thus far. And then we also have quicker to a capital event. And so typically in real estate, you make your money when you buy, but you realize that gain when you sell. And there's a huge compounding effect when you can turn and get that capital and then reinvest it at that higher rate, rather than, there's always a drag on your return based on how much of your profit is already inside of the deal, right? So essentially the compounding nature of it, and then the risk mitigation is something that I'm really excited about.
I think it'd be really interesting to look at, deals that you have that are, like value add deals, right? Because the first parts of those deals aren't throwing
It's
off
the
tons
hardest
of
part.
cash. It's the hardest part.
Yeah.
So
Yeah.
I think the ability to be opportunistic in that market, like that's really, really cool.
Oh, it's huge. And when you see people understand what that is, where it's like you said, the first part's the hardest part, rather than saying, oh, wow, I'm not having to wait for entitlements, or I'm not having to, we're in the action portion of value add where the numbers really start to add up. And it's fun when somebody understands that and kind of says, okay, let's do it.
Well, and the fun part about the decision-making process, because I get to be in there with the fund team, right, is when we're making certain projections to our passive investors, we have to buy accordingly. So right now we're buying very heavily based on cash flow, because we're offering that cash on cash return. So we're looking at opportunities right now that have 6 months or more of steady cash flow that we can base our decision on.
Right.
And so there's a lot of, exciting things that we're seeing there. And sometimes what we can do is, allow somebody to keep some of their back end, but we get that front end cash flow along the way.
Right. And so if they're able to get in at a discount, then obviously that cash flow is worth even more to them.
Yeah.
That's really
that's the beautiful part. So, we look at an opportunity right now with a large syndicator where the typical investor inside of that deal is maybe earning 5% on their money that they originally invested. And if we can buy it at the right discount, we may be getting 10% in the same investment, same stability, but we're buying at enough of a discount where we can get the higher returns.
Which one do you want, Eesha? 5% or 10%?
Is that even a choice?
Well, enough about the pre-iShare Liquidity Fund. We could talk about that all day long. But yeah, I would love to hear maybe some of the things that you're seeing from a tax perspective that maybe is common knowledge to you guys, but to our audience, they haven't thought through this from a generational standpoint. What are some of those tips that you can give somebody that is looking to take their wealth and transition it to the next generation?
Yeah, so we spend an inordinate amount of time talking about this topic in the Moonat household. I think the just the estate planning side of things has just gotten so incredibly complicated with the changes that are, coming, right? So we have a very generous estate tax policy right now, which sunsets in 2 years. So I guess if you don't die in the next 2 years, you can't take advantage of that. And we don't know what it's going to be. And so planning for it makes it really complicated. But we're definitely trying to take advantage of some of the things that you can do right now with respect to lifetime gifting, setting up trusts, and things of that nature to really move money out of higher level hands and down into lower level hands. So, move it down through the generations. It's complicated. I mean, we've had so many meetings on this topic, and I get opinions, and the opinions differ. So that part becomes really complicated. But I think for every situation, there is some level of planning that you can do today, which is going to improve that situation. From the tax perspective, what we do is just really try to hold it for as long as possible. And then, our process has just been to do 1031 exchanges around it.
Yeah.
And, the other things that, we've kind of talked about are just maximizing the things you can do to get into tax-free kinds of situations, right? Roth IRAs and, rolling investments from that perspective.
Mm-hmm.
Unfortunately, there's just not that much that seems to be left on the bone that we can see. But.
So as a Moonat, as you're born, do you get a self-directed retirement account and an HSA that comes as like a birth gift, or how does some of those things come about?
Yeah, I mean brokerage accounts, Roth IRAs.
Yeah. So, I mean, I have friends that very early they got their kids their self-directed retirement accounts, and they let them invest inside them. And pretty soon those retirement accounts were owning their own investments and compounding. And I mean, when I saw those kids, I watched those kids grow up, and now they're, in college. And these are the kids who are buying a house rather than renting, and they're renting to all their friends. And they're using this knowledge to continue to expand their wealth.
Yeah. I mean, I think the knowledge aspect of that is my favorite part, right? And, do you want to talk about, how you've been involved in making investment decisions and?
Well, I mean, involved in investment decisions, that's a bit of a leap. We talk about a lot of things, and I give my input. Like, I think that would be a good idea because of I don't know, I just really like that. And then Dad kind of explains to me why something he's talking about is a good idea. And then we talk that through, and then he makes the decisions.
I do make the decision. That's fair. I think just having the conversation is really the valuable piece of it for kids.
Yeah.
And I'm excited to sort of turn over an account or two, but right now it's been more in the discussion phase.
Mm-hmm.
So we'll do reviews every now and then. Here's where it's invested. Here's what's doing well. My son Avi's really upset that we didn't buy Roblox stock, for example.
I think that even if you have zero generational wealth, if I could know what you know at Eesha's age, that's like incredible. You're getting really the very best education where you can pick up and start over and over and over again. The beautiful thing is you don't have to start over because you've got a little nest egg that's coming to you to continue to grow. But that knowledge is such a beautiful thing. So just keep listening to them. And congratulations that you use her as kind of a soundboard so that she has to think it through.
I basically just want to be able to blame her for my bad decisions.
Yeah.
Told you so.
Yep.
Eesha,
that's why it doesn't work.
Eesha, you're about to be in your senior year, coming up on your senior year of high school, which means you are soon going to be an adult. What are some of those things that are on your mind as you transition into adulthood that you're thinking about from a wealth perspective?
Honestly, there's just so much going on right now. you know, that I really haven't had time to talk through any of my future. It's everything's kind of up in the air right now and everything's changing, and I have literally no definite plans for after high school. I have no idea what I'm doing. So we haven't even really talked about stuff to do with wealth. It's kind of like, am I gonna be an Eagle Scout?
Cool.
You'll get there.
Yeah.
Fingers crossed.
Good for you.
I like it.
That's cool.
Where do you want to be as far as career wise? I mean, aside from, the wealth side of things, what about from, just your overall life? Have you thought through that?
I mean, a little bit. I've always wanted to, do whatever the heck it is this one does. But more of maybe like a marketing thing. I'm not anywhere as good at sales as he is. Absolutely amazing.
Well, I've had a few years to, hone my craft, but, it's, I think the thing that's really important for me as Isha kind of thinks about this stuff is that she just has like a lot of exposure to what's out there.
Yeah.
She'd recently talked about wanting to intern at a hedge fund, and kind of get exposure to that. She wants to go into sales. She likes event planning. I think I think we have had those discussions. Why don't you talk about, maybe the broader range of things that that you've thought about?
Well, I mean, like you said, there was the hedge fund. I did have an internship like 2 years ago, my freshman year. It was like a 5-week internship at Builder. Don't look at Builder when he worked there. Totally not the same time. But it was really valuable for me, and I figured out that I really like event planning and marketing, and it's something that I, with more practice, I could be good at, and maybe something that I'd want to pursue in the future. And then there's always the backup plan, being a babysitter. We don't talk about that.
Your options will only grow from here.
Right.
You won't
Was it a
always be
particular hedge fund you were thinking about, or was it in general you wanted to, intern there?
I think it was more of a general thing. I was like, we have some friends who run a hedge fund, and I was like, maybe that's something that I might want to do in the future. How would I go about getting an internship?
Yeah.
Yeah.
Nice.
And luckily, if you learn skills, sales skills, I should say, those are the most important skills to have, regardless of what you do, whether it is babysitting and, teaching those kids, convincing those kids to act right, or whether it's in the event planning. I think that sales skills are the number one thing to learn.
I have a question for you, Shalabh. We spoke with a gentleman a couple of weeks ago who does training programs for family offices because he says oftentimes it'll become time to turn the reins over to the next generation, and they kind of go, well, here's an Excel spreadsheet, and they don't know what to do with it. Do you find yourself thinking in terms of how am I going to package what, unfortunately we can't take a little USB drive and give it to the next person.
Yeah.
Like, how are you going to package all of this to deliver on?
Right.
No pressure.
So I think there's a few aspects to this, right? I think there's like a baseline level of knowledge that's really required to be able to take the reins on in any capacity, really just understanding what the purpose is and things like that.
So she can think for herself, number one. Okay.
Exactly. And so, so we've started that process, right? Part of that is osmosis, right? Part of that is actually like learning these things. So, we have a relationship with Morgan Stanley, and they have an education program for, I guess it's primarily set up for like significant others and children of people that are kind of the primary person who's their contact. And so that's been a fantastic program. They have the kids down to the office. They have different, sort of courses that they can go through, and they're very age appropriate. And then for significant others, they always have kind of a theme of like, what would happen if the person who takes care of the money in your house is no longer there? Like, how would you, manage these things? And here are the things that you want to be aware of. So they do a really good job of that. I'm sure there's other financial institutions that do it too. There's the one that we have. But they do a great job of that. So I think that baseline level of knowledge, I think, is really important. And in our household, it's like a regular conversation, right? It's like dinner table conversation. We talk about tax law all the time. We talk about, estate planning. Like these are just things that happen on a regular basis. But it's, but in answer to like, how do you turn over the reins? I think you do it slowly, right? Like you do it over time. So I was really interested in this early on, but even for me, getting all the information from my parents around, here's where the money's invested, here are the types of investments that we have, here's what we're trying to do with it, et cetera. I mean, that took at least a couple of decades. And I want to turn the reins over faster, mainly because I don't want to do it, and I think she'd do a great job at it. But yeah, time will tell. But I haven't seen a great tool to sort of turn all of that stuff over, right? There's certainly financial planning tools that encapsulate like the numbers, right? And they'll kind of tell you, here's your asset allocation and things like that you could turn over on a piece of paper. But I think the why is sort of missing from that, right? Like, and that's really something you have to teach. Like, why did we decide to put this money in real estate, or why did we decide to, put money into Apple, or why did we put money into this 529 plan? Like, I think those are slightly more nuanced answers that you want to be able to give.
And some of that just takes time, right? Being able to have it as dinner table conversation, so to speak.
Yeah, as boring as it might be sometimes, I guess.
Well, sometimes it's entertaining. I forget how long ago this was, but on the subject of taxes, I was very upset that I'm not allowed to vote even though I have to pay taxes. Hey, come on, America. What happened to no taxation without representation?
Good point.
Well,
Thank you.
I love that. It's a good quote there. So go fight the man.
On all of our
You've got less than a year to do it.
I got 6 months.
6 months to change it for everybody. Well, it's always a pleasure. Thanks for coming into the studio while you're here. I'm glad you guys have a second home here in Utah. So hopefully we see a lot more of you.
Yeah, thanks for having us. This is great. I love the studio, by the way.
Thank you.
Thanks for joining us,
coming.
everybody.